The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, TGIF, I'm Dale Pinkert. How are you? Dollar's giving up a little bit of the ghost here. I don't think that it's bottomed the low that we had down there last week. How are you? Tom, Walter, Yazan, everyone doing okay? Hope everyone had a great week. I'm curious, what was your favorite part of FACE this week? Here's a dollar. Giving up a lot of ground here. Hi, David Haryanto. How are you? So the guppy, I'd take profits on the guppy here. Blake made a great call. Blake made a great call on the yen. The guppy has been the weakest yen cross because of the pound. Maybe there'll be another opportunity next week. So from 48, there's a couple hundred pips. Just take a quick look at the pound Aussie. Pound Aussie, I was talking about 174 when we were up here. We're down here. Be nothing wrong with booking this one either. Nothing wrong with booking this one either. Give me a Y if you get me. So those were a couple calls that I made this week. And I want to look at Canada, and then I'm going to bring Blake and Steve in. Still thinking that Canada has some more downside left. I know it's been stiff, it's been tough, but here we go. Once we take out 640, I think we could have a 1.618 of this. So this made it tough. We got up to almost the 88.6 retrace, but kind of a negative week there. Hello, Kevin. How are you? Take a look at Euro Yen. Sure, of course. Yeah, I don't see anything there but sideways. So I was lucky, and my trade selection on the guppy was that was the one. So neutral. You're very welcome. What was your favorite aspect of the week? The interviews, some market calls, Steve Volge. Oh, that's okay about the FACE Award. Thank you, Luca. How are you? Thank you, Brian. Good, buddy. So anyone have any answers for me? Maybe it was the interview with Chris Bear, everyone's analysis. Eric, the insight from the FA team. Okay. Getting Blake back, yeah. Chris was great. Okay. Yes, they are, Gino. I don't think I sang, Eugene. I didn't sing. Are you a subscriber, Gene? Are you a subscriber? Are you on to like the interviews? Okay. So it's our hope. Great. Chris, okay, David. It's our hope we're adding value to what each and every one of you are trying to accomplish as a trader, as a market observer, whatever you're doing. We hope that we're adding value to what you're attempting to do, and hope that we're supporting your efforts, and we're doing the best and working hard for you. So I believe in that you reap what you sow. So if FACE is helping you out, you need to click this link. Plant good seeds. Support who is supporting you. That's the end of my pitch. But two-way streets are better than one-way streets. You end up with a head-on collision. So we give, we receive, we give. It's a big circle. So I don't do a lot of trading on Friday unless there's an NFP. So
you would think that in a healthy market that the vast majority of the buying power was not central banks and institutions that don't really take into account what the average trader does. You know, after such a run, if you saw a healthy dip lower, probably you would see some kind of an acceleration, because if the market participants were individuals taking logical decisions, everybody would say, okay, yes, it's overdone, it's obviously overdue for a move lower, it's a good opportunity to offload some long exposure if I have any, or anyhow to join the downside to get some bucks, you know, from being short. But look what happened. I mean, who steps in a market that's so overbought to buy every single dip in such an emphatic way, right?
but I can say this, yesterday's low is going to be key. I noticed it in the Russell and the Dow. If we take out yesterday's low, let me just get to it.
Definitely. If you see in general, if you zoom out a little bit, you can see it from the chart there. The 2,380 level, this little zone around it, I mean, you know, 2-3 handles below it and 2-3 handles above it. If you see, we have plenty of daily wicks passing from there. I mean, we found
the Dow is real obvious. I'll show the Dow next, but look at this in the Russell. Back under 1380, you got something. But we could try one more high, and the same in the Dow. Look at where the Dow came off of yesterday on the daily. Look at that.
Yes, exactly.
Perfect. Okay. And the Dow didn't make a new high, so maybe the Dow's got to go, you know, 21.2 or something. But under this low, there's nothing but air. You have gaps. You know, probably we're going to get a break to 9.5.
But again, look at the Dow. You very nicely notice that there is a divergence with other indexes here, which is absolutely correct. But on the other hand, look at this. I mean, usually in a healthy market, when you see divergences between so correlated assets, I mean, they're all of them are stock indices for US companies. Of course, they don't represent the same companies, but you know what I mean. I mean, usually when you see such divergences and you fail for so many days to make a new high while the Nasdaq has made a new high, even the S&P incrementally did, etc., you would, after 2, 3, 4 failed attempts to move higher, you would obviously get buyers anxious, stressed, worried, and they would be selling. And
there's no fear. Well, look at the VIX.
Exactly.
VIX tells
and there is no fear. We fail to make a new high. Okay, fine. Who cares? You know, we will eventually make one.
Right. So and the foreign indexes look better. The DAX looks like the strength. The FTSE looks like we could have a 3-driver here too. So it looks like a lot of things are setting up for next week on the indexes in my stuff. So here, look at this on the FTSE. Rising wedge, right? Still something like this. Whoop, magnet.
Yeah, you need to disable the magnet so it doesn't mess up your line.
All right, so there. So I think those are going to be nice trades setting up next week. You know, mid-month is kind of like, you know, you have turnaround Tuesdays. Mid-months are also a time period for markets to reverse. So I'll be looking for some shorting opportunities next week for the 1 millionth time in indices. Maybe
we will probably need some kind of a little catalyst or so. But today's rejection of the DXY was very important, and now we need to see. Don't forget that that lately and for the past few months, we've had a strong correlation, strong positive correlation on occasions between stocks and the DXY. While this is based a lot also in the infamous dollar smile theory, that, you know, when the economy is not doing very well, there is an inverse correlation, but when the US economy is doing better, then the rest of the economies, the dollar and risk in generally correlate with each other positively. And we've seen that evolve quite a lot. I mean, we've had big periods on the move higher in the DXY that we had a high correlation between risk on and dollar strength. Let's see if that's going to decouple again, just because the stocks are looking for an opportunity to rally regardless. But today's rejection was from a key level. If you see at the DXY, we had a retest of the broken ascending channel, and actually I got really lucky with the timing there. I didn't expect that the CPI would be such a mover for the dollar. It just accidentally happened that you know, the Sigma Squawk asked me for a chart to give them every Friday, and this Friday I was looking, you know, the market was quite calm today, so I was looking what I consider to be, you know, the best opportunity out there, and I saw that we have a doji yesterday right on the resistance on the DXY, and I told them that if we get rejected from there, we're going to move back to the triangle's support, and a break out from any of those trend lines is going to bring the next move for the DXY, and then a few minutes afterwards we actually get the CPI. I didn't expect the CPI, to be honest, to be so weak, but it ended up being, and this is what we got. I mean, the last three candlesticks, if today's weakness holds, we get an evening star formation for the DXY, which points lower, and then the critical support becomes again the 98.50, which is the previous low we saw, and the triangle support. So 98.50 is going to be very critical.
And you see how the euro pound did not fill the gap, from that gap up. I have the daily up there.
Yep.
That's what I thought might happen. I don't know if you're still sticking with it, but I think
told you the other day, I'm still sticking with it because I'm in the money, but the more it takes for us to break lower, the more worried I get. I mean, this is now getting too long, the right shoulder, and too many people are now looking at it, and I've started not liking this. I'm actually probably going to think during the weekend I'm probably going to trail my stop further into my profit, because I'd probably want to bail if we see a close above, I don't know, 85.50, I would say. So I'd probably take profits there, but I'll think about it on during the weekend. I'll make a final decision about it.
Because can I see your screen, Steve?
Of course.
Thank you, buddy.
I'm taking it now.
By the way, guys, you talked about DXY. There's one chart that I want to show afterwards when you're done with the euro sterling.
Okay.
Okay, here it is, Dale. I don't know if you can see it.
Got it.
Yeah. So, you know, this starts worrying me. I mean, it's now becoming too long, this right shoulder, and this trend line that was the neckline has started mattering less. I mean, when you break decisively below a neckline, you know, you should be seeing some kind of an acceleration usually, and now we're just chopping around it. Of course, we still have this level, the 83.20 zone, which has been respected multiple times. So unless I see a break below here soon, quite soon, I'll probably take profits and run. I mean, I think there will be better opportunities out there afterwards. And by the way, since we mentioned it, let me also show what I was talking about in the DXY. This is what I was talking about here. You see, this channel was respected for a long period of time. After we broke out, we respected it as support as well. Here we supported, we got resistance here. Then
I love your charts, man. That's why I asked to see them. You had a great chart. So, yeah, see, I didn't notice why it stalled yesterday. That was really
you see, and then we got another rejection. So for me now, it's all about the game is being played here.
Right.
Here, I mean, are we going to see that? That's what I gave to Sigma Squawk, and they waited. If we see a break above this trend line, I will be also looking at this level, which will coincide also with the descending line. So a break above here will get me monitoring this zone, which is a little bit higher. A break above here.
Your first sign is going to be just taking out yesterday's high.
Exactly.
It's going to be that there's something else going on.
But on the other hand, as long as we remain above this channel, I'm a little bit biased to the downside. And if we break especially above this red trend line, then I'm going to be very worried.
Yeah.
I'm not going to be, because I don't have long USD exposure, but I mean, I'm going to be very worried for the next move of the DXY. I'll consider it a very likely event that is going to be lower.
Yeah.
Quite a lot lower, actually. I'm not still bearish the dollar, because Gregor has shown it as well, and I've had it in my chart for a long time, and I keep moving the C wave. I initially had it perhaps that it was here, then that perhaps it is here, etc. There is still the possibility that we had 1, 2, 3, 4, 5 waves up, A, B, C lower, and as Jamie said yesterday, and I agree with him, for the time being, this does not look like an impulsive move lower. But I have to add something to that. It doesn't mean that an impulsive move lower starts immediately feeling impulsive. You know what I mean? Yeah. Sometimes you get a first wave that it's rather slow, a second wave that makes you doubt the turn, and then you get a sudden third wave down. You know what I mean? That's very strong, for example. So, for example, let's say that might end up being 1, 2, 1 of 3, 2 of 3, and then we might get, you know, some acceleration lower, for example. I kind of doubt it yet, but there is the opportunity that we're going to see an acceleration lower. But for sure, I cannot be bullish as long as this trend line keeps capping the price action.
Yeah. Okay, buddy.
At least not in the short term.
Okay, and are you still with the Canada? I know it's been a kind of a frustrating trade. It
is a frustrating trade, actually. Joe asked me in the chat room as well, and I told her I had trailed my stop loss above here, but when I saw this move yesterday, which looked a lot fake to me, I actually pulled my stop loss again above the highs, because anyhow I'm only risking a few pips above the highs. I'll tell you, I'm still in the trade, I'm still in the money, but the more time we spend here chopping around, despite still being short in the trade, I will tell you that for every hour we spend not breaking below here and testing 136, the more I believe that this is a bullish consolidation that is going to resolve by making a new high. And you know something? Having been here for a few days already, even this ascending channel has given us more space to register a fresh high.
So so it could reach up to the 61. It could reach up to the 61.8 up there.
Exactly, without even violating the ascending channel. Exactly, those are my thoughts.
Yeah, that might be a better spot. So I'm going to
make a decision about that as well during the weekend. Perhaps I'm going to book profits and let it go. We'll see, and sell again higher.
Okay.
Any other pair you want us to have a look at?
Yeah, what do you think of the weekly action in the beast, the pound kiwi?
Pound kiwi, yeah, sure. Let's go. Okay, I'll tell you what my worry with pound kiwi is. I was all about getting a correction. Question. What if this is the correction?
Yeah, what if it is? You're right. Everything could change on an opening. You know, that's why
it's exactly, I see the same thing I see with USD CAD here.
Right.
We saw this move lower. I thought, oh, nice. Let's get an A, B, C, and buy somewhere lower. Here, for example, is a good zone 180, or here even 183. You know, but look at it. We seem to be correcting horizontally in time and not in price.
That's a great point, Steve. That's why, you know, it was a nice crack call up there on an hourly. So, I mean, it was a great hourly trade, but you look at this and, you know, they could take a, 200 pips away from you.
It looks to me that we have one thrust, at least one thrust higher before looking at a bigger correction. I cannot be sure, of course, because we're still expecting this little pennant. But usually formations like this, I mean, now I'm going to speak from an educational standpoint to friends that are listening that perhaps are more novice traders or whatever. Okay, you have a big move higher, and then you see this move finally cracking, and you know that there are a lot of people that are looking into shorting into this strength perhaps. And then you see that despite the efforts they put, they fail to actually bring it lower. What does that show you? That there still is a lot of active buy interest. And let's say that you were actually shorting up here, and initially you got enthusiastic, okay, this actually did work, you know, we're actually moving lower, and
yeah, you'd have to wait for it to break the bottom triangle line, and I'm not sure where that comes in.
Yeah, and it's not only that. Let's say, Dale, that you shorted after this huge Marubozu closing black here, and you were holding short from this level, 186, 174, and you kept seeing this consolidation taking action in length, but, you know, not in price change. Wouldn't you be worried already?
And the market is also taken very easily all the people trying to short it, and also people covering longs, you know, taking profit. Like I took half my position off at 188.50, and I'm sure there are many people who have done that. So
well, you know, but yesterday's candle took out the stops of people that were top picking it about a week ago. Yes. So that's the only bear case that
You're absolutely right. You're absolutely right. The only bearish signal we have is the fact that we got people that short down here with a stop loss above here. We knocked them out, as usually those markets like to do.
Yeah. How about the guppy? Similar?
Give me 1 second, because somebody's asking, because we were on it for pound Aussie. Okay. This looks, you know, like it's making more of a move.
Yeah.
But we are still holding this ascending trend line.
Yeah.
This ascending channel and the ascending trend line support. So
yeah, it's more bearish than the other one.
It is, but still, this is not a bearish, you know, chart yet. Yeah. I mean, not by any means. So and now we're about to test this previous high here, and we already found some support from it. Yeah. I still don't see a sign telling me, oh, pound crosses are a slam dunk short at the moment.
Yeah. They were better picked than Euro cross shorts this week. So how about the guppy?
Yeah, sure. Let's have
I was just short the guppy, by the way, overnight. I closed it out. And good morning, guys. I just
hey, Blake.
Good morning, Blake.
How are you, buddy?
Good. I actually just closed the rest of it right after this retail sale, like right here at this price.
Yeah, nice.
Although I think, Blake, that this level here, 144.80, 145, might act as a magnet. I more or less believe that there is a good likelihood we are going to test first. Great trade, by the way. Of course, there's no question about it. But I think that we might test this zone here.
I agree. I was more worried about the S&P was rallying following the retail sales numbers, so I was like, I didn't want to stick around just in case the market kept ripping. Yeah, so
you got some fast profit. It's nothing wrong with that.
Yeah. It was from yesterday when it broke the uptrend line there. I think it was at like 146, like 90 or so, and once it broke
nice instincts on the yen short yesterday, Blake.
Thank you. You know what it was, Dale, and we talked about this, and Steve's, I don't know what you guys have talked about this morning, but did you see that chart I sent out on bonds this morning? I tweeted it out on bonds. I also, obviously, ForexAnalytix subscribers got it too, but the bond market, you know, and the bond market, if you look at a 4-hour, we had a nice.
You're going to tell me the descending wedge, right,
Blake? Yep, and we're
it looks like it could come out of here.
Yeah, so we were talking about that yesterday on the webinar, and the fact of the matter is, bonds rally, the yen's going to continue to strengthen as yields go down. So then you go to the pound yen, and that seems like a very doable target, Steve.
And to be honest, Blake, you know something? Everybody, I read everywhere. Everybody was short bonds. I didn't know many people being long bonds. And look at this. I mean,
everybody.
I totally accept that fundamentally, from a fundamental perspective, I understand the argument. Okay, no question asked. But let's just look at the chart. We have this move, and then you have like a pennant correction. I mean, yes, I understand why you don't want to be bullish, but currently looking at this chart at the moment, and especially if we break again above this zone here, this horizontal zone, I can think of no reason that in the short term I would like to be short bonds. No reason at all.
Well, you know, if you just consider the lows of flagpole, right? The lows look like what, about 123-ish, rallied to 27. We're breaking out here at 25. That takes you to 29. You have some fibs up there at 28.78. That was a big breakdown in after the election, and that would be, you know, pretty close to you know, between 50 and 61.8% back. So that's where I think we could go, guys. That would be enough to clean out all the shorts, I think. That would be enough.
Oh, yeah. And then the market will be we'll find it more easy to move lower if it wants afterwards.
Right. That's what I think. It'd be a great shorting opportunity up there. So,
yes, but generally, I have to say, and we've discussed that lately, you know, with the guys as well. Lately, the markets have not been easy. Let's be honest with each other. I mean, there are times that you see clean direction, etc., etc., etc. But lately, the markets have not been easy. So people have to be careful with things. And the reason they haven't been easy is because, first of all, we get a lot of political events that influence trading. So that's a factor that people are now more afraid. A great example of that was the fact that despite Macron being considered a slam dunk win, the market did not treat it as such because we've had the Brexit and the Trump incidents. So the market refused to believe that anything is a given nowadays. And, you know, they were afraid that despite whatever was being shown, that Le Pen might actually make it. And political events on one hand are influencing. Trump is not helping at all on the other hand, because he's had a lot of things in his agenda. Some of them are very controversial. Some of them he has already proved that he has absolutely no problem abandoning from his agenda. So the market does not even know what to expect from the US. So the US is a big question mark at the moment.
What are they saying in Europe, Steve, about, you know, like the FBI director getting fired and stories changing? What's it look like, the U.S. look like from across the pond? What are people saying?
I would
not
say
what you were saying, but you know what you're reading. You know, I mean, if I turn on BBC News, it's different news than if I turn on ABC, NBC here. So, you know,
I will tell you that from a personal standpoint, I've seen a lot of people like Trump before. I mean, I know this model of a politician. You know what I mean? It's the populist kind of a politician that says a lot of things that knows that are popular, a lot of things that knows in advance that are not actionable upon, or anyhow you cannot actually act upon them without hurting the economy. Trump is definitely not a stupid guy. There's no question about it. The fact that he is where he is by following a very controversial agenda proves that he knows what he's doing. But on the other hand, I'm very, very worried that the fact that he's going to try to satisfy some of the promises he's given in advance, and the fact that I doubt very little that he's a hardcore businessman, that his own good is at the top list of his agenda. I don't think that's very good for the planet or for the US long term. And I honestly hope that I prove to be wrong. I honestly hope. You know, there is no scenario that's going to be bad for the US, and it's not going to be bad for the rest of the planet. So, you know, I'm personally hoping that I'm going to prove to be.
We catch a cold and the world gets pneumonia.
Oh, definitely.
Yeah.
Definitely.
Okay. All right, enough politics, huh, guys? So I had a great time hanging out with you guys again this week. We had some great interviews, didn't we?
Indeed.
My gosh, yeah, and you've got a lot of great interviews coming up. Do you want to kind of tell us what the lineup is like in the next couple of days, just to keep everybody thinking?
Okay. Let's see. I have Peter Goodburn, who I interviewed a few times. Peter was real right about the metals and the dollar last year. He's an excellent analyst. He's out of the UK. I have a couple of new guys that I haven't interviewed before. You know, Blake, I like to give people a chance to have some visibility and get their name out, even if they're not real well known. So I kind of mix it up between, you know, knowns and unknowns. So I have a couple of people that aren't real well known. This one guy is decided to set it and forget it, Chimo Nwo, and Alfonso. I don't have his last name written down, but we also have Greg Michalowski. So, you know, a lot of people know Greg.
Oh, man. You know what I'm going to do is I'm going to go over to his house when he's interviewing. I'm going to knock on his window.
Oh, that's right. He's in Phoenix too, right?
He's like 3 miles away, well, like maybe 2 miles away from me.
Okay.
We go out and have a beer every once in a while.
Greg Mike FX will be with us.
He's he's really such a great technician. I mean, really.
And now let's see, near the end of the month, I have Boris Schlossberg. A lot of people know Boris. Boris has been on CNBC quite a bit, partners with Kathy Lean. And I have this guy, Mark Yusko. I noticed him on Twitter. He's a fund manager. He has some controversial views. And then the big week is Monday, June 5th. The author of Market Wizards will be with us. He sent me his new book. It's a very comprehensive book on the fundamentals of the futures market. You know, I think anyone who ever wants to take a Series 3, this should be required reading. And then I have Peter Bookvar on the 8th. Peter's been on CNBC. Kind of a long-standing skeptic of the market. I'm going to be interested to hear what he has to say.
Yeah, so, he's always great to watch on CNBC.
Yeah,
too.
So kind of a blend between, you know, real well-known people and people that probably should be better known.
Yeah, good point. Good point. So you got a lot of great interviews coming up, and guys and gals, just so you understand that why we do this, you know, this is a free webinar hosted by ForexAnalytix, obviously by us, but it's for your learning benefit. It's so you guys and gals can get different viewpoints of some of the best market, whether it's technicians, analysts, thinkers out there, and it's really a venue for you guys, just because you know, I know how I've been trading at home now for the last it's been 5-6 years now that I've been back in Phoenix, Arizona, when I moved back, you know, with my family here. And you know, I trade alone, I work alone, and it's for those of you that know this, or you probably already know this, it's lonely sometimes, and it's good to have different viewpoints and understandings. And you know, we've talked about this before, but I'll mention it again. You know, I could care less about a competing, like you would say, competing product to ForexAnalytix. Who cares? Who cares? We have a great product, and we're proud of it, and we think that you'll find value out of it. But there's a lot of different products out there that are available to you as traders. And one thing that I would highly recommend that you do, whether it's us or anybody else or using multiple sources, is to invest in these different tools. You know, like I said, whether or not it's us, we're proud of what we do, and we're, you know, we're confident that you'd be happy using our products, but it doesn't really matter if you find something from one of these analysts or one of these traders that you find valuable, then it was really worth your while, and we're happy about that. But because we just want you to survive as traders, and we want to reshape the bell curve. That's been my long-standing commitment, and kind of my, I want to say my, kind of like my mission over the last 15 years is to reshape.
No one else that has a service to sell does this, Blake.
No, because I don't care. We don't care. I really don't care. I care. I know you care, but I mean, we think that, there's enough to go around. But the fact of what we're trying to do is we're trying to just to ensure your success, and we can't guarantee anybody's success. There's just no way that we legally and possibly could do that for anybody. But if we can help you become more profitable and give you that extra tool to survive the tumultuous market environment that we're in, then we win. We all win, and so that's that. But hey, Steve,
and our technology is the best. The push alerts. Have you seen that anywhere?
No, I mean, we push out alerts, mobile, desktop, all over the place. And one thing I wanted to make note of is when you guys are using ForexAnalytix, for those of you guys that use it, you have to keep it running in the background. So here, let me take over, Steve, really quick. I wanted to show you guys a couple things anyway on these charts.
Go ahead.
I just want to show you one. I wanted to show you one thing for people that use ForexAnalytix. You have to keep it running in the background like this. However you want to run it, you just have to keep the page open to get the desktop notifications. If you're like, I don't get desktop notifications, well, you got to use Chrome or
Firefox.
Is it Firefox? Yeah, Internet Explorer
or Safari if they're using a Mac, it works there as well.
Yeah, and Internet Explorer is really funky. I hate Internet Explorer, just so you all know. It's
Microsoft products do not even support browser notifications, so it's impossible.
Yeah, and I just, in general, I just dislike it. But anyway, all these like intraday updates, you'll get push notifications on your desktop as long as you got this running in the background. So, because you only see 3 tabs here, but I've got like 15 tabs running on my desktop at all times. So just keep it running in the background, because you don't need this running all the time. Most traders have other stuff. You have charts, you have everything, but just keep it running in the background to get those push notifications. And obviously, if you're mobile, you'll get them there. As long as you have the app on your phone, you'll get them pushed even if your app's not running.
Nice look on that yen there, Blake.
Yeah. Well, thank you very much. This is this actually, if you use ForexAnalytix, I just pushed out a pattern in play for and this is a freebie for those of you guys that are not subscribers. You can see a pattern in play here. Like Nick did the euro pound yesterday, and then or yesterday or Wednesday? Yesterday?
Yeah.
Was it yesterday? No, 2 days ago.
Yeah,
okay.
She did.
2 days ago.
Yeah, it was right near the lows.
Yeah, and so and Grega did crude. You can see these, but this is the dollar yen. I just pushed this today, entry level right at these prices. But basically, what I'm looking for, because the breakout in bonds I think is real. I'm looking for the dollar yen to do this.
Right.
Right. So, so we have this trend line break here. You go over to bonds. So here's your 10-year. Okay. You got the bond market that's breaking higher. That's the 10-year. Yeah. Here's your 30-year. Your 30 year is about ready to snap. Once this goes, then the yen's on its way. But, it's more anticipatory than anything. But you take a look at the dollar yen, and you got the dollar yen that's breaking down and probably is going to come back and retest this trend line, which comes in around 112.50 or whatever the case may be. So, and it obviously could go further. It's just, this is what I would expect initially. I mean, obviously if we break through this trend line, we could see 111 and break through all this support. We could really come under some pressure. But
here's the Pinkertism that I ignore sometimes, Blake. Do the right thing today, and tomorrow will take care of itself.
Are we going back to the previous conversation?
No, just anything in the charts. You know, like you're saying, you're not looking for, you know, you're just looking for this to happen in the next couple of days. So if you're doing the right thing today, you don't have to worry about the future. It'll take care of itself.
Yeah, well, yeah, exactly. Well, hopefully, unless unless Kuroda has something to say with it in regards to this trade. But I mean, you can see the risk is pretty manageable here. I mean, you know, if you're trading this trend line break and you're like, let's say we're right here, you know, 113.40, which we are. I mean, you can risk above 114. You can risk above 114.50. You know, target down at 120, 112. You know. 50, 112, well, 1225, maybe even a little further if you start looking at some fib levels, depending on how things pan out with equities and bonds. And you could target all the way back down to 112, which would be a 38% retracement. But these are things that I'm looking at. And look, you know, we also, I'm also one of the things that I don't know if you guys recognize this right now that you're listening to this webinar. Myself and Steve and Dale. And also the other, you know, all of our other team that comes on here and other guests, we also are trying to give you some actionable ideas, things that you can think about, you know, ideas like right now saying, oh man, you know, I wasn't even thinking about shorting the dollar yen, but, you know, maybe if I could get a bounce back up to like 113.50, I might be able to short that and even get a better entry right over here. You know, these are just ideas that and I'm not short the dollar yen right now, just so you guys know. I'm kind of going into the weekend flat, but you know, if we got to push back.
It's called intelligence gathering.
Yeah, of course. You know? Yeah, it's like,
you know, Blake, we have a lot of guys in the community, and I'm going to ask Jack Schwager about this because he actually has a company called Fund Seeder, where if you're an aspiring trader, he's looking for the new wizards, and you have a nice track record to show. He'll fund you. He'll find people to fund your account. So if you're an aspiring money manager, be here for Jack's interview or go to his website, fundseeder.com.
Ooh, that's interesting.
And you know, I've been with people like you have for like years, and you've seen their ideas and their calls. And there are a lot of people like, you know, I go, well, why do you come to FACE? I mean, you're a great trader. Why are you there? Because they get ideas that they wouldn't see with their own two eyes, and the collaboration and sometimes a different method giving them more conviction of what they're seeing. And I'm a big believer in social trading, and you know, I think that it's an edge. So it's an edge for me to hear you and to see Steve's charts and to look at some of the things that the community is sharing. It's an edge.
Yeah, you know, hey, here's the thing. I don't necessarily, you know, I look at other people's charts. I mean, that's the thing about like Twitter for me. It's like I'll look at somebody's charts, and I either respect the trader. Usually, if I'm following, I'm doing one of two things. If I'm following you on Twitter, all right, I'm either I respect what you have to share, or I'm fading you. So you know, you don't know which one is which, but I'm doing one of the two. I follow different people for different reasons, and let's make there's no question about that.
Do you follow Dennis Gartman?
I fade him. Yes, I do.
Yeah.
But I read his letter. You know, I try to read it every day to fade that. That's more important to me. But no, most of the people though, you know, honestly, most of the people that I follow because I respect their viewpoints and I want to see them. So when if you may not trade the way that I trade, but you may respect what I do and how I do it. So you may look at the dollar yen and say, okay, I see what Blake is saying. I'm not comfortable with shorting the dollar yen, but I could see how it may come down and how it may be influenced by bonds and maybe equities. And so therefore, I'm going to think twice about some trades that might be opposite that view because I do respect what Blake does. It doesn't mean it doesn't mean you have to trade what I trade. And no, and I always tell people this, especially with our, you know, we have a small group of traders with the fund that we trade for. we all have different ideas, and none of us really follow each other's trades like blindly. What I mean by that is, hey, you know, oh, I'm shorting the dollar yen. Great, I'm going to short the dollar yen too. Why? I don't know. Just because you're shorting it. No one does that. What people do is they say, hey, Blake's shorting the dollar yen right now. Does that fit into my does that fit into my trade strategy? Or I was looking to buy. What does he see that I don't see? And because you can't necessarily mirror my trade because you don't know what my mindset is at that time and the reasoning for me taking that trade. That's why copycat trading to me it's never made sense. Like it doesn't, because you don't know my approach and you don't know my mental state at that point. You don't know what, you know, where I'm at from a profit loss scenario for the week or the month or the year. You don't know how I'm going to handle that from a 4 hour to 1 hour to daily to weekly time frame. It's just not your trade. So to mirror a trade to me never really makes sense. It's to take in, you know, because on these webinars I have time to explain, oh, hey, I'm looking to short the dollar yen here, but I'm only looking for a near-term pullback maybe to the 38% retracement and then to get long. Well, now you kind of got a better idea of what I'm thinking, but if you didn't hear what I had to say and I just posted a chart of the dollar yen breaking down, well, you don't know what to necessarily do with that. And so this is, again, these webinars are great because you can get a better sense of what Steve is trying to accomplish with whatever he's looking at, or Grega or Nick or Dale, myself, or any other people that are brought on to the webinar, and they're talking about, you know, their markets, their instruments. So it just gives you a different point of view. And so what I'm trying to tell you is, you know, formulate your own opinion and respect other people's ideas that you do respect. I mean, I can guarantee you there's people out there that say, Blake Morrow, he's a schmuck. I'm going to do anything opposite he says he's doing. I can guarantee it. They're probably going to lose money. I'm just going to tell them that much because I've been doing this for a long time and I make my living doing this. But
you know what, Blake, what's important about what you're saying, it doesn't show up in your account balance, but there are people that I may have an idea and they're polar opposite to me, and I don't like to be on the other side of the market as them, and I can't tell you how many times it saved me money. And when you save money from being avoiding a bad trade, you don't really know it because your balance isn't affected.
Right.
You know, so it doesn't really show up, but, you know, it would show up. You know, you could keep a ledger. Well, you know, I was going to take this trade, but XYZ was bullish when I was bearish. If I would have taken that trade, I would have lost 90 pips.
Yeah.
So I didn't lose 90 pips. And you know what? That's as important as being in a good trade, in my humble opinion.
Yeah, and that's the other thing is exactly. There's a lot of guys that I'm going to say there's probably a dozen people that I follow, whether on Twitter or via email, or that I follow pretty closely. If they're doing something and I happen to be on the wrong side of that or the opposite side of it, I do take notice. Now I got a question really quick from Peter. Said, is Blake in a chat room? I can see a Forex chat tab on his screen. I am. I'm actually in a couple of different chats. This one is a private chat that you see up here. Some of the guys might actually be listening in right now. You can see it right through here. It's a private. It is not open to anybody, but that doesn't mean it won't be in the future if you're a ForexAnalytix subscriber. I'm just throwing that out there. I didn't guarantee anything. Hey guys, if you're listening in, say hi. Oh, look, the Jumbotron. There's Amir, there's Nidish, there's Joe, there's Eric, there's Steve, there's Jack, there's Greg, Ziggy.
Who's gonna win the dice? Who's gonna win the dice, man?
I don't know. There's Ron. See, everybody's on Jumbotron right now. So this is a private chat that I have with people that I've been chatting with forever, and we talk about trades and whatnot. And this may eventually be open up for everybody. So just anybody that's a ForexAnalytix subscriber. Not yet, though. It's not something that we do. Anyway,
Also, people asked before you took the screen for silver, and then they asked for gold. So since you have the screen, why don't you go over the two precious metals?
Yeah, absolutely. You know, silver. Thanks, Steve, for asking and for pointing that out. So silver has been, you know, I'm not long, and I should be, because we hit this 127% extension for the last couple of days. If you look at ForexAnalytix and you go over to silver, we've had strong candlestick formations the last 2 days. You can see silver posted an inverted hammer, which has the potential for a reversal. This is on May 10th. Yesterday, silver posted a white candle today, and this is the first actual bullish candle we've seen since the 13th of April. We need more to see a reversal, but you can see that everything's starting to turn green. If you go over to like the basic analysis tab, you know,
Steve Volge scaled into that one.
Yeah, silver managed to respect the 127% extension. The daily RSI is grossly oversold, and this may be due for a near-term bounce. This was on the 9th. If you're a short, you may want to protect profits by moving stops closer. 1661 may be a target, which was previous support. So, you know, this is you know, we've been telling you for the last couple of days, things have been firming up. Now, how far gold moves at this point is probably more due to bonds, I think, and equities. So same with silver and gold as well. Gold hit the 786 retracement, you know, and started to firm up too. We got near oversold as well. I'm not as, obviously silver was more oversold, but I think the precious metals are really bouncing for good reason. I just don't know how much upside that they have. I got my butt, just so you guys know, I got my butt cleaned and I got my butt clocked in gold. You know, I got long here at the, basically right here at 1250, and I knew this 50% retracement was right here, and I knew the trend line was right here, so I started basically building a fairly aggressive long position 2 weeks ago right here, and I got stopped out right here. But it was an aggressive position, so it hurt, and I'm not going to lie. I mean, I took the retracement. I thought we'd stop here. It didn't. Once it fell through that, I got hit. So I'm kind of gun shy when it comes to gold right now and silver, just because I got my butt whipped in it, you know, 2 weeks ago. But anyway, I think it can firm up, and we might bounce another, you know, maybe $5 to $10 here, especially with bonds rallying. I think it's entirely possible, and with the yen rallying too. All right, guys. Well, you know, that's all I want to say. I'm done. Somebody's taking a look at me. It's Friday.
I think we have Gregor in our company.
What?
And
what?
Yeah, we do. And I think he's more than eager to share some of his work as well.
You know, Greg, are you here?
Yes, sure, I'm here.
Dude, it's good to see you, man.
Same to you as well. So
Yep.
I'm ready to scan some charts. I already prepared some, so I know what to talk about. But
Okay.
as you know, Elliott wave is very complex, so that's why I always need some time more.
Right. It's coming over right now.
You are tracking only trend lines. I must count waves and do everything else as well.
Well, see, you've got practice, Gregor, because you got little kids and you get to count with them. See, my kids use calculators now, so the Elliott wave stuff is beyond me. That's a bad joke. Okay, anyway. But no, just so you guys know, Gregor is our esteemed Elliott wave in-house analyst. He has his own, private service as well. You guys, this is one of the very few Elliott waivers that I really respect. So, Gregor, it's all yours.
Okay, thank you very much. So, you can see my screen, all right?
Yes, Gregor.
Okay, so today, I think I mentioned already at the start of the week, Monday, Tuesday, when I paid attention to New Zealand dollar against the Japanese yen. I think that those yen crosses could make a pullback. We have seen some nice push to the upside over the last few weeks. So I was scanning some charts and was looking which pair is the most interesting. So before I will show you this New Zealand against yen, I want to look at this overlay chart. Okay, so this is actually this in black is the S&P 500. Okay, and the others are just yen crosses. So normally, okay, when I will want to look for a trade which on the FX which will be impacted probably by the stock markets, which means if the stocks will make a pullback from current highs, which I will show you in a minute why I think this could happen, then I definitely want to be positioned in the yen cross, which is the weakest. Okay, so here we have in black, as I said, the S&P 500, which is at the top, and here are correlated yen pairs. And as you can see here, back in September, we have seen a move to the upside on the yen crosses, and then markets were actually consolidating for some time. Then we have seen a reversal, a pullback down on the S&P 500 to April lows. A pullback was much deeper on yen crosses, and then we have seen a bounce since then on stocks and New Zealand dollar, yen, ASEAN as well, and others. So now when I'm looking for potential reversal down on stocks, which I think that S&P 500 is trading close to resistance, then definitely, as I said earlier, want to be positioned in the one which is the weakest. And as you can see here, New Zealand dollar against the Japanese yen is at the lowest levels here, okay, compared to others. So definitely, if these markets will turn to the downside, then I think that this New Zealand dollar against the Japanese yen could definitely fall below this level from April lows. Okay, so I also, when I spotted this, I went immediately to New Zealand Japanese yen wave count, and I also see nice wave structure there, which could bring us more downside. Okay, so here's actually the S&P 500 count, where it suggests that we may see either a reversal back into this range, or maybe even sharp decline for a wave C. If you're familiar with the Elliott waves, then you know that there are also flat patterns, very common on stocks, because usually it will make a very tricky movements. You will see a spike price action through some important levels before market will actually make very strong moves. So we might have seen this latest spike right there a few days back, and then reversal lower right now. And if we'll see a new or further weakness early next week, then I would not be surprised if we will see a gap to be filled from April 21st, and then maybe even push lower into wave C to test these levels from March. And if this will come in play, then, as I said, New Zealand dollar against the Japanese yen could also see more weakness based on correlations that I showed you. So here is actually this my wave count that I'm tracking. It's I really like this structure for the short-term basis. We have a nice unfolding impulsive decline. We have some serious strong declines back in at the start of April, or through the whole April actually. So what really caught my eye is this recent recovery, which was clearly an overlapping move. Okay, first 3 legs up for wave A, then you have a wave B, and then maybe 5-wave rally for a wave C. You can also count this as a combination ABC X ABC, which is also corrective price action, but that's not the point. The point is that no matter how you count this, that this is a counter-trend movement. It has a characteristic of counter-trend movement. We have seen a nice move down from these resistance levels. I was watching 2 resistance levels for this week. First was at 78.40. Second was at 78.58. We have seen a nice drop this week from those levels, and we are still holding down there. So it looks like the bears are coming back in control. I have also hourly chart here breaking this trend line. So I will watch next week very closely this market for a potential short-term bounce to get on the short side. Also here, if you take a look at these weekly candlesticks, I really love this formation. Let's zoom this in. We have a stronger reversal candle here, so I would really not be surprised if we'll see more weakness here. Okay, the stocks, as I said, are still strong, but New Zealand against the Japanese yen is acting weak, And if stocks find the resistance, I think that this could be a trade.
Nice.
Anyone
Awesome,
still here?
Greg. Hey, by the way, I've got to, Greg, I got to check out. I mean, I know you still got other things you're going to talk about. I just want to say thanks for being here. I've got to check out really quick because I've got to do something around my office. So
Have a great weekend, Blake. We're going to be wrapping after Grega. Have a great weekend, buddy.
Dude, thanks everybody, and Greg, thanks for your analysis. Actually, that was actually bye, Steve. That was great analysis too, because I'm in the same camp as you. So thank you very much. I'll see you guys later.
Okay, Blake.
Grega, we were actually looking at the at the New Zealand yen chart and the Aussie yen chart, and we were looking at resistance zones as well, and the rejection through RBNZ was indeed textbook from a non-Elliott wave perspective as well. So yeah, I think Elliott wave just confirms that point of view, and I'm on the same boat for you if that comes.
Grega, is EuroCAD still on your radar screen if we get a rally back to that 150,
yes, actually,
50 and a half level?
Yes, actually,
Because it looks like it'll go there.
We have seen a nice bounce in the euro, also in euro dollar as well. So actually, there's still, if you recall, I was looking for and mentioned a free wave decline that could take us lower. And it looks like that we have completed this wave 1 or wave A. We don't know which wave is this. But what we know is that current leg should be corrective. We have a free wave bounce here. We are now at the first resistance zone here at 1.4950 to 1.4980. And the second, maybe even more important one, 61.8% is...
That's what I'm looking for next week.
What, 70 pips
okay, buddy.
higher. So today is
See,
Friday.
I remember what you say. I remember everyone's trades.
Really?
Yeah.
Then you also know that we talked about crude oil that will break higher.
Yeah.
Remember? Yeah, so...
that was an amazing pattern in play, by the way, Grega.
Yeah,
yes,
nice shot.
We will cover this, and I also wanted to take a look at euro pound, because I really liked pattern in play from Nick. I think that she's still in, right?
Yeah.
In that pattern in play.
It's still active, mate. Yes, it's still active. More than 1% in the money.
Yes, nice. So actually, what I have also mentioned, Nick, is that we had a nice free waves pullback down to this gap zone. And actually, as I remembered, she put a trade out exactly at these levels, at 61.8%. So the wave counts and are based, I suspect that her trade was based on harmonics. So actually, analysis matched up pretty well. And I believe that we are going higher now, probably testing this resistance zone. Not sure where the Nick is, watching, but on the longer term scale, I think if euro dollar will come under pressure, then even euro pound could continue lower into this wave C. But for now, next leg up is still in place. So regarding euro dollar, if we are at euro pairs, this one is also at interesting levels now. Short-term charts, I think it really matters. I think that today's close should be very important. We have seen a weak euro since Monday, and today we have seen a nice bounce. So if we will continue to be strong till the end of the day for the US session, then maybe I will have to consider some other counts as well. But for now, I think there's a nice resistance zone at 109.30. We have three waves up. If we'll see some sell-off in the next few sessions, then this would be really strong indication that the euro will stay under pressure. So now it's a decision point, and which could also impact EuroCAD as well. So
right. Well, if we go to 111, you have 111 for count 2, right?
Yes, this is my alternate count. I always want to make my back covered, so to know where to look for if something changes. As I said, if we'll see just an aggressive continuation to the upside, then clearly this would not fit into a style for a wave C. And traders we'll understand that wave C is normally slower than wave 3. Okay, so if we'll see extension, then I should maybe relabel the wave count and would look for a wave 3, and then maybe discount would come in play. But nonetheless, I think that Euro could face the limited upside, okay, sooner or later, definitely. Let's say by the end of May, maybe in June, we could see some important reversals, if not all, if this top was not already seen back on this Monday.
Okay.
So
thank you.
So you wanna show your crude oil targets, Grega,
yes.
now that the trade is mature?
Yes, actually, we are here at really important levels. There is room for more upside. If you recall, I mentioned that we have one leg to the upside and we need at least 3 waves. So this third leg, either it's wave C or maybe wave 3, if this count is wrong, third leg was playable, okay? And we have seen a nice reaction to the upside. Now, after when fifth wave is extended, like it was here on our case, you may see a reversal back to the starting point of wave 4, not to the end point of wave 4. And actually, we could label important levels around 48.50, 48.60. So there is some more upside available, but I would really pay attention to what will happen here. If we see strong break above 49.30, then this could be indication that we will go much higher. Also here
to combine it with basic technical analysis, Grega, at 48.70 we have a strong horizontal support resistance zone, and we also have the ascending trend line that we broke on the way down. So this also fits your target. I mean, 48.70 is within your target, right, of the end of the correction. So yes, yeah, that is a nice confluencing level.
Yes, actually here you can see why I'm looking for some more upside here on the right. I have, if traders are familiar with the Elliott wave techniques, or maybe not even, they don't need to be an Elliott wave trader or analyst. They just understand what are impulses and corrective waves. Impulses are fast, corrections are slow, and that's probably the most important thing that you need to understand in the markets to be on the right side. So here, if we take a look at the price action from the last 24 hours, clearly we cannot say that this is bearish impulse, okay? It's a slow price move in very limited range, so it must be a correction. So I'm looking for this to be wave 4 and expecting a push higher into wave 5. And again, fourth wave triangles occur prior to the final move within a larger trend, okay? Which means we will expect a final move within this larger trend, which can be 1, 2, 3, 4, 5 wave movement. So I think that upside, as said, could be limited. We may see only a temporary 3-wave retracement, then new continuation higher, or maybe a 5-wave decline as part of a bigger drop that is unfolding already since start of the year.
Grega, there is another friend asking about USD CAD, obviously because it's also correlated, you know, decently with oil.
With oil, yes. So dollar CAD, actually, if we take a look on big picture, I think that this one has probably one of the clearest patterns that I was looking. I also posted chart of the year in January or February, and I highlighted this dollar CAD because of this sharp decline, sharp reversal in 2016. Clearly, this must be an impulse. It looks like an impulse, and also this recovery, if we now consider it on this on a daily chart, we can see that the recovery it's higher, price is going higher, but it has very difficult to stay bullish. Okay.
A lot of overlaps, a lot of choppy price action. Yes, you're absolutely right about it.
Yeah, so it has some hard times here, which means that I'm expecting a reversal. I firstly thought that this bearish move already began here, but since dollar index is turning, can be turning up, we may see a little bit more upside test of this upper channel line. Or maybe
yeah, there you get the 61.8, Steve, that we were talking about earlier.
Perhaps, yes, perhaps one of his high, because Grega, what I was saying, I'm actually short from like 10, 15 pips from the from the high, which was an amazing entry point. But on the other hand, I was saying today that seeing the short-term price action, this looks more to me like a bullish consolidation, so like a fourth wave triangle in a sense, having to do with the way that price action is. You want to take it down to a 4-hour chart to have a look?
Actually, I'm looking for this to be bearish on the short term.
You are, eh? I'm with you. I mean, I hope you're right. I'm actually short from almost the top, but to be honest, the way I was looking at this, I was afraid that it might create a final thrust higher to give higher prices to short.
Yes, actually, a triangle is a very good point. It can be unfolding here, but this decline, this decline was made in 5 waves. Okay, here. And
yes, you're right. The first wave down was 5 waves.
Yes, and it came out from this wedge. Okay, which I referred, it's not a clear one, but I referred it as
ending diagonal.
Yes, and since we have seen, because ending diagonals are slow, choppy, overlapping, and while reversals are strong. And this reversal was very strong compared to any upward reaction when ending diagonal was unfolding. So momentum was definitely on the downside, and that's why I think that we could see more weakness, maybe only a 3-wave decline, Steve. But I think that this could be a flat correction, A, B, C, and we will continue lower. But from my point of view, from my trading approach, there are definitely different scenarios possible. As you said, triangle is one of it, so you really would have to be nimble here. If we reach this 1.3 770, then I really think that we could see a spike to the upside. So maybe you add position at the highs.
Yeah, we'll see. I've trailed my stop above the highs, so I'm like risking like 15 pips. But I don't know. The more it fails to break down, the more I'm afraid that it has one more high to produce. But I'm seeing the same thing you're seeing, and I'm saying that for people to understand that, although to be honest, I do follow Elliott wave analysis. I mean, I do my own Elliott wave analysis, not on the level that Greg is doing it. I keep to the basic counts, so it gives me a little bit more direction. Greg takes it granularly down to to the minimum level, because that's his trademark. But I'm totally with you. The move lower from the highs is impulsive, and that is why I'm saying that to people that are following. That is why I'm looking for opportunities to be short the USD CAD instead of being long, because I believe that we are much closer, even if we haven't seen the top, we're much closer to a high than to anything else. I don't believe that we're going to penetrate through the highs we had last year, and I do believe that we're going to turn lower sooner rather than later anyhow.
Yes.
Well, that would also argue with what Greg is saying about the crude, is that we get that pop, that final pop, and then we pull back and maybe just a corrective pattern, and then crude has much higher to go, like 60, 62, and that would be the nail in the coffin on USDK.
Actually, I have discount for crude oil here. Actually, what really matters to me is this overlapping decline from start of the year. Okay. Yeah. I cannot count this impulsively, so the only thing that left me is a corrective wave, and it can be ABC, X, ABC.
So a zigzag, yeah?
Yeah.
Yes, and another retest of $40 per barrel could be possible. That's why I labeled here that maybe we will turn down from these wave beer resistance levels from 48, 49, around there. So, but we will see how this will play out on the longer scale. I think we can continue higher, so definitely we'll see a 5-wave development from current 3-wave bounce. That would be even better. $4 CAD weakness, of course.
Right. Thank you, Grega. What a great way to wrap the week with your work. Thank you so much.
Thank you. So I will
Steve, thank you.
Thank you for having us, Dale.
Stelios, thank you. Blake, you're gone. Thank you.
Thank you, Dale.
Thank you, Nick. Thank you, Stelios. Thank you, team. Thank you, community. I hope that you enjoyed today's session. We're going to kill them next week. So have a great weekend, everybody. Remember, this is a good time to do your analysis when the markets are closed so that you're executing rather than analyzing on the fly next week. So you're very welcome, Bob, Stalin. Nice to have you. Stay in Moscow. So you're trading live from Moscow, Stalin. Rick, take it easy. I'll see you guys. Hardianto, take it easy. And remember, trading is what we do. It's not who we are. Don't just count your pips, count your blessings. You had a good week and you see someone standing on the corner with a cardboard sign, help them out. And team, another great week hanging out with you. The time flies by every day. So have a great weekend, everybody, and I'll see everyone on Monday. Arrivederci. Ciao. How do you say it in Greek, Steve? How do you say goodbye? All right. See you guys. In Greek.